Every week when I have a guest, I always say I'm excited, but I have to tell you guys, to be honest, I'm really extra excited today to have really a expert in the field of reverse mortgages and an important component, and as a result, a important participant and observer of the estate planning process, Christina Harmes, who's a reverse mortgage specialist out of San Diego, California, but she also does reverse mortgages, she does coaching, but I think more than that, she's a real advocate for families preparing ahead of time and professionals being involved in the preparing process. Christina, thank you so much for joining us today.
Thanks for having me on. It's always a pleasure to be here. And I'm also very excited to be on today. We're going to share some really good stuff.
And I think the thing that, we talked before, as we set this up, and we've spoken a number of times, but as we set this podcast up today, we really want to talk about, I think, why it's important if you want to be able to have a reverse mortgage done, that you have your estate plan done ahead of time to make the process go as smoothly as possible. So talk about the importance of having the estate plan done before the reverse mortgage or the pitfalls if it's not done properly.
Yeah, this really comes into play. I have generally two types of clients. Planners, they get their stuff done in advance before anything happens. And then the non-planners who look to the reverse mortgage as the last resort. And the situation where the estate plan is so vitally important to have already done and in place is when the parents start to have cognitive decline. When coming to a reverse mortgage, one of the big things that we look for is elder abuse. And we also make sure that our borrowers are competent, right? As we age, there's more chance of dementia and Alzheimer's and cognitive decline. Well, with the reverse mortgage, what they want to see when you come to do a reverse mortgage, maybe for a parent who is ailing and there's a power of attorney, right? If they're not able to make their own financial and legal decisions, they want to make sure there's a power of attorney in place. But what happens a lot of the time, and it's unfortunate to see, I see it in my world a lot, is that families wait until they're already seeing the cognitive decline. And so then they'll get the paperwork and then they'll come to me and go, okay, we got a power of attorney last week and we need to do a reverse mortgage now so that we can pay for the cost of care for mom. Generally it's mom or dad, not generally both at this time, an old, ailing parent in their 90s, 80s. We want to do the reverse mortgage now. And we got a power of attorney. And I say, okay, we are going to need a doctor's letter to prove competency and to have a date of diagnosis. And here's where the real problems come in, is that we want to see that the person was totally competent when they signed that legal document saying, I want this person to do my power of attorney. Right. And if it's a week before the diagnosis, or sometimes they'll go and get the doctor's letter and the diagnosis is a year or two ago, and the power of attorney paperwork is after that diagnosis, or if it's very, very close, a lot of the time we're not going to be able to use that paperwork. And it's my unfortunate position to have to say, you've got to go get a conservatorship, which, as many of our viewers know, is a lengthy, expensive, hard process. And so get your stuff in order.
I used to go to LA probate court every day. And in LA probate court, they handle both probates, trust litigation, and conservatorships and guardianships. And I would watch, and the conservatorships, you could always tell because in LA County, the case numbers, the first two digits are the year, and then there's a code and then the file number. So if it starts out like 25 STPB, the case was filed in 25. The conservatorships are always like 19 or 18 or the old numbering system before they used the year, which was like 2017 or before, meaning conservatorships are just long-lasting sucks of money and pain and pride and humanism and everything, and there's just nothing good about it. And so if you have to wait to that point, and so let's talk a little bit. Obviously, if you're getting reverse mortgage to pay to put mom in a memory care facility, there is proof right there you have a problem, right? So that's not an option if you're waiting to that point in time. And so I think like me, you're on the, hey, you should have a estate plan done anyhow. Like, why wait until it's even close to a problem? Do you get a chance to talk to those customers even when they're not ready to do a mortgage? Do you have a chance to talk to them about the important, or I guess maybe you do forward mortgages, but do you get a chance to talk to them about the importance of a plan long before they need it?
Well, a couple of clarifications. I actually don't do forward. All I do is reverse. The only thing I used to a long time ago, so I know the landscape, but I don't do anything but reverse these days. And generally, no, because those families are not coming to me saying, hey, we might want to do a reverse in 20 years when some of us needs care. And that's not generally what happens. Like I said, I get the planners and then I get the failure to planners, And the failure to planners, those are often the adult children. And I feel like it's just this thing where it's like there's a cost to be paid. Either you're going to pay it, and hopefully you do. You get your trust and estate plan and your power of attorney in place while you are still cognitively in control of all your faculties, and say, if and when this happens, because the likelihood of it happening, especially when there's two spouses, is pretty high. We all pretty much agree on that. The numbers say so, that 1 in 2 is kind of likely. Get this stuff in place. Otherwise, your children are going to be paying the cost of it. And that cost is generally higher, right? Going through a conservatorship, having the lawyers involved, it's a much higher cost than just going proactively to get your estate plan in place and getting this paperwork all thought out. And who knows what you really wanted? You know, a lot of the time it's that one child who charges in, who's the A-type personality, and this is how it's going to go. And maybe that's how you wanted things handled, but maybe it's not. And wouldn't it have been nice to set it in place before you got to that point?
And so that's why I always talk about this topic, and that's why I always encourage people to get estate plans before you need them. Famously, a case, Jay Leno, one of the really great people of the world. He's very understated and off the radar what he does, privately. But I happen to know, because he was involved with a charity I was involved with, that unfortunately his wife, who has dementia now, and their estate plan doesn't cover medical decisions. And here is one of the wealthiest people in Los Angeles, one of the best known, beloved person in Los Angeles, having to go to court for a conservatorship for his wife, all because certain paperwork wasn't done. And it's just hard to believe that, and so we're all busy. And on the other hand, getting it done ahead of time will always, there's a cost to it, but it's a lot less than if you have to go to court. It's like 1/10 the cost, 100th of the cost or less. Let's talk a little bit. I know I used to be, I don't know you know this, I used to be an originator. I started the business in 1986 and through about 2008. And along the way, I did some reverse mortgages. I called them 1.0 back when it was really a bad product. I think a lot of the negative publicity stems from that old product that's been changed. But one of the things that I know is in those days, you had to deed the property out of any trust to do the reverse mortgage and then deed it back in. But if people forgot to do that, or they did it improperly, or the deed back in wasn't an insured transaction, the deed out was done through title insurance, deeding back in may not have been, it would cause all kinds of problems. So talk a little bit today, can you do reverse mortgage if you have an estate plan and it's already in a trust? Can you do reverse mortgage today while leaving it in the trust?
Generally, yes. I say generally because the specifics of the trust matter. If you're getting a pretty generic trust and estate plan done, most of the language that I've seen it works pretty well. If you have some funky things going on, it may not work. And it depends on the type of loan too. There's different types of reverse mortgages out there today. And so exactly what you're saying, when I started in this field too, I also had to say, oh, sorry, we got to take it out of the trust to close. And now that's not the case. We actually have the trust reviewed by attorneys. They make sure everybody has the correct powers to do what they want to do within this trust. And then the recording of the reverse mortgage is done in the trust. And so one of my favorite things to say is, hey, why don't you go get a trust, get that paperwork done and send it in during the reverse mortgage process?
Yes.
Now, it's a heavy lift for people because they're dealing with all the mortgage stuff, right? We all know getting a mortgage is not super easy. It's a lot of paperwork they got to gather.
It's fun with you though. It's fun, right? Isn't it like unicorns and rainbows and balloons and glitter?
What I like to say is kind of like when you're getting a shot at the doctor's office, right? I'm going to make it as painless as possible. But I mean, it's still the mortgage process. I wish I could be rainbows and unicorns. But if you do get that done, then we can close in it. Now, here's the other thing I get asked a lot is that, hey, I don't have a trust yet, but I see the value of it. Can I do a trust later and put the reverse mortgage in it? And the answer there is generally yes too, but you need it reviewed. Any transfer of title could be a triggering event for that reverse mortgage. So you want to call this number on your statement and say, hey, I've got a trust. I need you guys to review it. And then I want to record my home in the trust. And both of those options, I think, are much, much better than the alternative of no trust.
So because I'm a real estate broker doing with probate, I deal with it didn't work out right. And I can say doing the reverse mortgage in the trust, if you can get it done before the estate plan before, now you have an insured transaction. And the benefit of that is that there's any contest to that transaction, maybe from husband and wife to the trust or individual to to the family trust. There's title insurance that helps protect you. It's not foolproof. It's just insurance, but it's better than nothing. And so I always encourage people, if you can get it done and get it done insured, there is advantages that later you're going to bypass some steps or bypass some challenges. The other thing is, while it sounds cumbersome, I have to submit the trust to the lender to review. The lender is hiring an attorney to review the documents, and they're kind of giving you a set of eyes that they want this to be smooth too. They don't want to be in litigation. And so to some degree, when they look at it and say, hey, this is wrong and needs to be corrected, my experience is usually they're catching problems today while you're not in litigation that if the trust is being litigated down the road could be a problem. So while on one hand, nobody wants extra reviews and have to make changes, and you want it done right the first time, sometimes that extra step can protect you in the long run as well. So I would really encourage people. I love the idea of getting the estate plan done while you're doing the reverse mortgage if you can, so that it's deeded in the trust. And if you can't, get done afterwards, make sure the lender, and Christine brings a great point, make sure the lender on your servicing is the one that reviews the trust, make sure it gets done properly. So when you talk about a reverse mortgage, from the time somebody says, hey, not just I'm thinking about it or talking about it, but I'm ready to go, I'm ready to sign a check, I'm ready to give my credit card if I have to pay for something, what is the time period most commonly from start to finish?
Great question. Now that depends on the originator and a little bit on the file. I will give it that, and the house and the property.
Well, not the bad originators, just you. Great ones like you, or the best like you.
It's important to know this though, because one of the reasons people think reverse mortgage is a scam is because anybody's allowed to give it a shot and try it. And they don't know what they're doing. Yes. And so you'll hear out there among regular mortgage people doing regular mortgages who try a reverse, oh, they're terrible, they take forever. They take forever because they don't know what they're doing. So generally, if you're working with somebody who does know what they're doing, they're going to pre-look at everything before we just submit garbage to underwriting. And we're going to look at things and make advanced decisions, letter of explanation, other documentation, and make it a little easier to make sure that underwriting can go, okay, this looks good. If you're not well versed in reverse mortgages, you don't know what to look for. You can't guide the client well. So what I'll say is, everybody that you've had on this show pretty much is a good reverse originator that I've seen. Generally 30 to 60 days should be reasonable. And with that said, it is a team sport. It is not 30 to 60 days from the time you say, okay, Christina, I want to do this reverse mortgage thing. It is 30 to 60 days from the time you actually get your documentation in, get your counseling done, and we can actually start the file and order that appraisal. Right. I've had clients who, they take forever in getting their documentation done. They take forever in getting their counseling.
What?
And then the process.
Don't send the papers right away. What are you talking? I've never heard of that before. If you're my customer, don't listen to this. We all turn our paperwork in right away. Don't listen to Christina. Go ahead, Christina. I'm sorry.
Well, yeah. So then, it's like 6 months into the process for them, but really they only got me their documentation like 3 weeks ago. And they're like, why aren't we done yet? It's taken forever. And it's a team sport. And then there's often conditions. So working together with your originator to get those things done. I will say sometimes there are repairs on a property that need done, and that will drag out the process. So again, working with an originator who knows what they're doing. If you have anything in question, send your originator the pictures. Say, hey, here's this thing in my house that I think is a questionable thing. Are we going to need to repair it? And often, if the answer is yes, get it done before you start. It makes your whole life easier, and it makes it so you save a little bit of money in the process as well.
Just to make sure everybody who's watching this, I appreciate people who are fans of the program and maybe binge watch multiple episodes. The reason why almost all the originators I have are top-notch professionals is one source I found to invite guests was on the list of certified reverse mortgage professionals. And that's a certification. And in my experience in real estate, we give out certifications like Halloween candy in real estate, but this one is really legitimate. And I do know that in all the people I talked to about that certification, they all appreciate it. They all feel like it was worthwhile getting, that it separated them from the bottom 90%. And as a result, all the people I've had as a result of that have been excellent guests for my podcast, which is great. I want to talk to the best. So it's not just 4 letters, but really is a standard of excellence that Christina adheres to, as well as some of the people in the podcast. And I think that's really important, that the reverse mortgage experience is totally different if you just go to some originator. If you ask 100 loan officers or loan originators, do you do a reverse? I'm telling you, 99 will say yes. And 98 haven't done one in a year, not even one. And so that's the reality of this business. And the reason I did this podcast, as a real estate agent, I would get phone calls from buyers agents representing buyers, and the loan was reversed for purchase. And I would call the guy he's talking about. And so I said, this is not serving the customers well. We need to do this better job. And so that's what we have Christina on and other people from the CRMP program. So thank you for pointing out the quality of the guests we have. But again, that's my goal, is to be distinctly picking the best of the bunch. So we've talked a bit about, obviously my world is when the estate plan's not done properly or not done at all. That's called probate. Or it's not done properly and there's litigation. That's called trust litigation. I deal with those all the time. But also there are people who do this for in their estate plan. They have the plan ahead of time. They know what they're doing. And this becomes a tool in the toolbox for somebody putting a plan together. So talk a little bit, in just high level, to an estate planner or a family in an estate plan. Why would a reverse mortgage, why do they need a mortgage if they're doing a estate plan? It's all about their stocks, their bonds, their pension plans. Why would a reverse mortgage even enter the equation if you're discussing estate planning?
Well, that's a great question. And it's because you need to look at the entire asset portfolio. And in general, real estate is a really big asset.
Right.
And we're talking primary residence when we talk about reverse mortgage, and it's an owner-occupied thing. But still, I did a reverse mortgage on a $16 million home one time. That was their biggest asset. And also what we see is as people age, and sometimes these higher wealth people have taken better care of themselves. They've had better medical care. They've just had better affording better lifestyle. So they're living longer. And they also live through those assets. And so the reverse mortgage will come into play, hopefully. Now, here's my dream. Everybody who at retirement time, okay, we retire, here are the things that we need to do. Get an estate plan in order, get a reverse mortgage set up for that line of credit that will grow. That line of credit will grow to be a huge number by the time they actually need care, way bigger than if they looked at a reverse mortgage at that point in time at that age. Right. So those are the two things I wish everybody had on their list, and get into some sort of diet and health exercise program so they reduce the chances of falling. Those are the three things, I guess. I could come up with like 20 things, but here's the really important things, and why they merge together is because it's all part of the plan, right? If we were looking at our lives going forward, going, okay, there may come a day where my mind doesn't work as well as it does today.
Hey, what are you saying? I'm sorry.
Well, what do I want my life to be like? How do I want this set up? Who do I want making decisions for me? What assets do I want to use? And the reverse mortgage is a large asset. That's not the asset. The house is the asset. The equity is the asset. But it's the way to make the asset liquid without incurring a new mortgage payment. And most people say in retirement, don't have debt. What they really are saying is don't incur new monthly obligations because of debt. A reverse mortgage is the type of debt where there's no new monthly obligation because of the debt. It actually takes away a monthly obligation or gives access to the liquidity.
And also may not trigger taxes, because of people who go into retirement and they expect they have assets and they need some more money, so they're going to sell certain stocks or real estate. And next thing you know, they have a tax bill due for, if in California, it could be 30-40% of the profit from whatever you sold is going towards that. Whereas a reverse mortgage could possibly strategically that can come out tax-free or tax-deferred and deal with that in a family planning situation. That makes a lot more sense. And the other part is I just feel like it's just a great flexibility tool, because I have plenty of clients who are running through their assets and they say, well, we don't really worry about that, because once we get down low enough, we're going to sell our house and move to Florida or Arizona or wherever they want to go, which is great. It makes sense. But you don't sometimes get to choose when that happens. I literally have a client who they moved their mom out of her house to Nevada. They're getting ready to sell the house, and boom, it burned down. And they have $2 million of equity they can't access until the insurance company writes them a check. I have other clients who have a reverse mortgage, same situation, and they wrote a check for, I think, $400,000 or $500,000 and bought a nice little adult village condo thing for mom to move into. And they'll sell that property or they'll settle with insurance when they want to. But they had the flexibility, whereas the other people did not. And I think if you have that big an asset, you should do your best to try to protect it and make it as liquid and available as possible.
Absolutely. I'm also a huge advocate for helping people stay in their long-time home if they're able, because they're going to age much better.
I
One
agree.
of the impetus for me in this career was my own grandfather moved around a lot in his old age, and he eventually tripped over something in the new apartment layout. And if he had had a reverse mortgage where he'd been able to stay in his longtime home, the whole family thinks that it was probably in the middle of the night. He was going to the bathroom, didn't remember the new layout, tripped over something. He was on the floor for 3 days. And the last 6 months of he broke his neck, but he didn't die. And the last 6 months were absolute horror. And I was in my teen years watching this go down, or maybe early 20s. And it was just absolutely horrifying. And when I came to the reverse mortgage, I realized, oh, all these young people just say, oh, it's the finances. Oh, just move mom and dad. But the reality is, if you want your parent to age well, keeping them in their environment they've been in for a long time, unless that environment is terrible, right?
Right.
If there's 17 flights of stairs, we can all agree that's probably not the best place.
Right.
But short of that, it is not just a financial decision. It is also an emotional, gigantic shock. And that emotional shock is huge on somebody with just aging brain,
Right.
aging emotions. You are creating so much loss in this event because the finances make sense. It is not the only value people need to take into account. And I think exactly what you just said, even if that is your idea of, oh, we'll just sell. Well, I work with a lot of people in their 90s who thought that was the plan. Well, you know how easy it is to move in your 90s?
Not. I'm in my mid 60s. It's a horror to think about having to get rid of everything. It's a lot of work. Physically.
Yeah, it's terrible.
And I think there's a certain grace to aging in place. I didn't appreciate it. In real estate, if you read the real estate news, you can see kind of the propaganda is to get all the old people sell houses and move into apartments or condos as a way to avoid building new houses. And that's kind of like the popular political culture. But the reality I see now, because I am older, but I've lived with these same neighbors for 20, 30 years. Why would I go to some new neighborhood? Yeah, I can meet people. Yeah, there's activities, but I have neighbors all around me. My daughter lives 5 blocks from me. My grandkids are still young, but are going to be able to walk by and visit us in a way they won't be able to somewhere else. Yes, you can drive an hour or two to visit grandma, but you also can walk 10 minutes and see grandma and grandpa. And so I just feel like people should have those options. And the reverse mortgage, if there's one thing reverse mortgage does between the mortgage and the payment and the lump sum and the monthly payment, the lack of payment, and the equity line of credit, it gives you options. And that's why I think it's a tool in the toolbox. It's not a solution. It's a tool that can be part of a solution for almost anybody in estate planning. So talk a little bit, do you get involved at all with estate planners? Do they ask you questions on the capabilities or the loan to value options for their clients? It seems to me, anytime you would do an estate plan, you'd at least want to have someone like you that you could at least email and ask, what are the options available that I can factor them into our plan? And I know that doesn't go on hard. I'm asking the question. I know the answer. They don't. You have one or two that do, but the reality is all estate planners should be calculating how much equity is there and what's going to happen with that over the next 5 or 10 years, because that is, as you mentioned, their biggest asset.
Yeah, I wish we had more that cared. The estate planners that I've gotten in conversation with in depth, a big hang up that they have is, well, the reverse mortgage has to be an owner-occupied property. What happens when they need care? And it took me a while to really understand the landscape, but I finally found my answer, which is generally people are in care for 2 years. So what are you going to do from now until that point in time? And if we can make sure that there's at least 2 years worth of equity remaining in the home, so that generally the family is going to be looking to sell to pull the rest of the equity out, pay off the reverse mortgage, get the rest of the equity. You're not selling the home to the bank with a reverse mortgage. Big misconception. It's a mortgage. It's a lien on title. So you will still get the remaining equity out. If you have 2 years worth of equity to pay for that cost of care, that is the perfect solution. Yeah. Get the reverse mortgage. The house appreciates while you have the reverse mortgage, which is why there's generally a lot of equity still left, depending on the market. Of course, I'm in San Diego. It's easy for me to say. If I was in Iowa, where my dad's from, maybe we wouldn't be having that same conversation so much with the equity piece. But it still is a perfect planning tool to get you from here to there. And some people will never need to go into care. And so that what if that is prevalent in other professionals' minds and mine as well, because I protect my clients, make sure there's equity left. That what if could have created a whole disservice their whole retirement because they never actually even got to that level of needing care. Some people will pass before needing to get to care.
So, and I think another reason why estate planners are down on reverse mortgages is they see the occasional, what I call reverse mortgage SOS, meaning, they did an estate plan for mom and dad. Mom and dad have a trust set up. The liquid assets all pass. Maybe the real estate all passes, but now the kids have a property and there's a mortgage that doesn't get payments done for 6 months or so, and they get a notice of default in the mail. And they don't realize, well, there's an orderly process to this. You just need to know what that is and have somebody kind of hold their hand. And I would say, well, call the originator or call me. That's what I do as a broker. I'll walk you through and hold the process. But that doesn't happen. You're one of the few originators that do keep those relations with your clients. And that's why I urge so many mortgage originators who do reverses to keep in touch with their clients, so that that fear of, well, what happens when they die? Well, when they die, like anything else, they're going to have to sell it and deal with it appropriately. So how do we get kind of estate planners to understand it's just no different than stocks or bonds? Yes, you need to transfer title. There's a process to do it. And by the way, I'm here to help with that. You're here to help with that. How do we get that message across?
I really think that they just need to establish good relationships. Pick a professional, somebody from your YouTube channel that really speaks to you, and call it to them, reach out to them, create a relationship. Now, in my practice, it's always been really helpful to answer whatever question comes up.
Yes.
And to be able to do that. And to be able to do that, you kind of have to be really good at reverse. So I urge any estate planner who says, oh, I've got a reverse person, call and ask them a bunch of questions and see how you feel about with their answers. If their answers are not good, then that should not be your reverse person.
Right.
They should be able to guide you through and be there for you and your clients. And there are stop points, right? We are originators. We are meant to help with the beginning of the loan and making sure it's structured right, make sure it's the right fit, get you into the loan. We do not have access to the back end generally. And so we can help guide through the process, but we don't have access to the numbers. We don't have certain powers, but at least it's the same consistent voice. The other thing is there's a book written by Dan Holtquist called Navigating Reverse, and it is so helpful. All of my referral partners, I send that to them and say, hey, yep, there you go. That's it. Easily ordered on Amazon. Thank you, Dan, for writing it. It is a book to help people and their heirs understand their options, because when you call the servicing department, there's just, if he can write a whole book about it, there's just so much information that the servicing department may or may not be able to explain at that point. And so having that book available, I use that as a closing gift for my clients. I say, keep this with your loan documents, make sure your heirs know about it. Each chapter is written as an answer to a question. So each chapter is like a page or two, and it's an answer to a really common question.
It really is. It's really like a how-to book that you would think the reverse mortgage lender would send out. You're doing that as an originator. To me, it seems like, as real estate agents, we give out, like, I think each real estate closing I have a customer sees about 2 million pieces of paper, right? They get there's so many disclosures and they describe everything. Well, the problem is it's so much, and it's all either paper form or it's an e-sign, but they're not really organized. But a book like that, and it's very short. When I first got it, I thought it seems a little too simple. But on the other hand, it's very easy to find the right answers quickly. And it's a great handbook for any originator, for any real estate broker in this field, or any estate planner, or any customer who has a reverse mortgage. It's definitely worth keeping handy. So thanks for pointing that out. Well, Christina, it's always a pleasure to talk to you. We always have so much we could talk about. We have to kind of limit it. But for people who want more Christina Harmes in their life, what's the best way to get in touch with you? I'm going to put up your contact information on the banner. What's the best process to get in touch with you?
Yeah, call or find my website, ChristinaHarmes.com. Make it easy. My phone number is up there on the screen. My email is somewhere on there, but there's a get a quote section. You can just contact me. Also, I have a YouTube channel. If you're looking at just what can I know more about reverse mortgages? Oh, thanks, Bill. You got it right there. I have a YouTube channel where I answer a bunch of questions. I interview people, customers, clients, referral partners, loan originators themselves. And this channel is dual purpose. It is for information for possible customers and referral partners, but I'm also a reverse mortgage coach for loan officers.
Oops, I'm sorry about
there
that.
I am.
Didn't interrupt you. There you are, doing an actual video, an actual person.
Uh-huh.
Yeah, I'm sorry.
Yeah, so that's a wealth of information. So I just say, like something on there, subscribe to it so you have access in the future when you have questions. My contact info is also on that YouTube page.
So I'm subscribed, and 3 more links. And there's your other links to your other information. So it has all your info there. Christina, as always, thank you. Just a wealth of information, a wealth of knowledge, both to to me as a professional in the field, as a real estate broker, and to estate planners, to other originators, they should look to you as a resource. And I also know you do coaching as well. Reach out to Christina if you're interested in finding out more about that. Thank you so much for your time today. I always appreciate chatting with you and learning more from you.
Thank you, Bill. It's been a pleasure. And thank you for the opportunity to share this wealth of knowledge. People need to know.
Yeah, definitely. Well, thank you. And for the rest of you, this is Estate Planning Weekly. We get together every week and we talk about estate planning and usually interview a professional like Christina, top people in their field that can help you if you're an estate planner, help you if you're a family looking to get an estate plan done, or professional looking for great professionals to refer to. Continue the conversation. Our Facebook group is Estate Planning Weekly. Go there and ask questions, put referrals, ask questions if you need help. Put answers there if you have them. Post your content related as well. Love to promote you. As always, I'm Bill Gross at Bill Gross Probate on social media. If you want to reach out, please call, text, email. If you like this, put a comment down. If there's something else you want to talk about, please as well add that on. As always, make today your best day ever. Thanks so much.